All right, everybody, let's just go over the markets. A couple of things I wanted to go over. First is, let's go over the lesson. One is how to identify a change in trend. All right, this is a topic that's, there are different methodologies. They discuss different ways. You'll find, I'll show you the simple way to do it, but one will say trend line break, which is bullshit, by the way. Trend line break is just a momentum break, because if you understand trend line, it's a relationship between price and time, which is what? The y and the x axis. So a change in the trend, meaning a break of the trend line, just means that the momentum is not the same. The trend line is a momentum indicator. Its slope is the momentum. But anyway, forget all that crap. Let's go through this. Is how to identify change in trend. So there are many methods. They talk about trend line breaks. They'll talk about some type of 3 pushes to the high. What else have you heard of is some type of diversions. Of course, you've heard of climaxes from the Wyckoff school of thought. You have climaxes. You also have, some type of shortening of the thrust. So it just really goes on and on and on. Sometimes folks will use a moving average, like two big moving averages, like 200 and I forget the other one, when they cross. So there's a lot of ways, right? But here's the point. A trend, Wyckoff actually talked about it. He says, when the distance and duration of the down waves are bigger than the distance and duration of the up waves, you have a change of trend from up to down, and vice versa. So he gives the trend example, but it's a very power-packed line. That one line is really something, because it really is packing a lot. So here's easy way to identify trend. All right, so when it's doing this, let's just say it's doing this, you have an uptrend, right? First thing is to identify an impulse wave, which is a rally wave. That will give you support level. The rally wave, all right? There are 3 types of waves. When you put on a wave chart, all the zigzag shit, right? When you put on a wave chart, basically classify waves. The most important are the rally waves, okay? Second, you have the pullback waves. These are also known. Rally waves and pullback waves are impulse and corrective waves, right? So just make it simple: rally wave, pullback wave. And 3 is other. That's like the crazy shit. We don't know what it is, inducement, this, that, whatever. So what I mean by other is if you have something like this. So you have a rally and a pullback, but then it starts doing this. Like, what the hell is all this? Right? And then it'll do that. So all this is other. These are inducement, all bullshit waves. So this I don't have, I don't want to go into trying to quantify and qualify them, but basically they're just other. I just put it in that bucket. What's meaningful is this is the rally, this is the pullback, this is a pullback, another pullback that comes pretty close, and then you have your next rally, another rally, it's bullshit wave right there, and then stuff like that. All right, so you have to be able to identify the rally waves. So how to identify a change in trend is when this support of the rally wave is taken out. Done. Change of trend. That's one key way of doing it. The other way of doing it, these are the easiest way to identify change in trend. All right, is you understand that whenever you have a rally wave, you typically have a breakout bar. These are widespread bars, right? So let's say you have that breakout taken out. That's a change in trend. Meaning the breakout to the upside was taken out by breakout to the downside. That's also a change in trend. So these are two very easy models, very easy models that show you a trend break, and then price is going to go in the opposite direction usually. You know, it just shows you, because the strong hands are no longer there defending support, which means lower prices. Because it was not defended, it means lower prices. Support this, it's going to go lower. So these are how to identify a change in trend is all right. So support resistance level of a rally wave is taken out. The support level taken out, or the breakout is taken out by an opposite by a breakout in the opposite direction. Now this is reality, all right. So this is why you have to be really careful with other craziness out there, because some of it, I don't know, is really insane. That's the right word. All right, it's just there's a lot of stuff out there that I don't even know. It's over analysis and stuff like that. But this is the way it's done. Practically speaking, 1, 2. These are what you need to know. Breakout is taken out by breakout to the downside, or the rally support taken out. Done. Finished. And this fits the direction of what Wyckoff says also, because he says, maybe I'll bring it up 1 second. Here's a little excerpt. The tape reader must always be on the lookout for a change in the immediate trend. It is likely to change its direction 1 to 3 times in a session, right? A change in the direction of the immediate trend can be detected relatively easily. So this is basically a change in trend. In an uptrend, right here, this is what you need to read. First of all, it's easy, because in an uptrend, when the selling waves begin to increase in time and distance, which means just bigger, or the buying waves shorten, either or both of these conditions will indicate a change in the immediate trend. The same reasoning is applicable to a downtrend. All right, that's it. How does the trend change? When the selling waves begin to increase in time and distance, or the up waves shorten, You go from an uptrend to the downtrend and vice versa from a downtrend to the uptrend. So that's this. This here is shortening and the breakout on the upside is taken out by breakout to the downside. So it has to be bigger. And here the rally wave is taken out by a big wave that takes out the low of the rally wave. So I mean, this is the way it's done. But I'm making it a little bit more specific here by telling you that the break of the support level, and here by identifying the breakout and the breakout in the opposite direction. So, all right, so we're done with this lesson on how to identify a change in trend. All right, but the basis of this, what I think is really important, is this right here. You need to be able to classify when you see waves. What are they? Is it a rally wave, pullback, or other? If you can't identify, the waves, forget trying to classify all of them. Just identify the rally waves. Once you identify the rally waves, you automatically pick up the others. You don't need to focus in all types of wave and classify them. Just look for the rally waves. Very obvious. Why? Because they're big. They're like bang, like that. That's your rally wave. Right? So once you classify that, you know the level. Why? Because if it's a wave like this, it has to be caused by the CM. The CM causes the market, pushes the market up exceptionally. Like right here, this is a rally wave. This right here is what? This is a rally wave. What's this? A rally wave. This is a rally wave, holds. This is a pullback, hold, pullback, boom. Rally wave, pullback, pullback. 2 pullback waves, right? This is 3 pullback waves followed by a rally wave, followed by 2 pullbacks. So you'll get the idea of here you have a rally wave right here. You see this? This is today's action on the E-mini. It's a rally. So what does that mean? It means I'm going to buy pullbacks. And here on the daily, what is this? It's a rally wave. What does the rally wave have? Typically has a breakout and takes out prior highs, completely exiting their range. Very important. And expansion in the sides from upwave to upwave. Typically, for example, you have this upwave. The rally wave will always be bigger. Or most of the time it's bigger, not always. Because if you have 2 rally waves consecutively without a complex correction in between, then it's possible for the one rally wave to be smaller than the prior up wave, which is another rally wave. Anyway, I'm not going to go through all this, but this really is the key in identifying trend and being able to trade trend. Now, let's take a look at what I'm looking at. So here we have the market was pulling back, right? I knew this thing was going to reverse. Hell, I definitely knew it was going to reverse. Why? Because this was the level, tapped it, and these guys came in with authority, with big volume, right here, 18, right? And they waited for the fundamental news. It was a PCE to break out, but the move was timed with PCE, but the accumulation happened before PCE. I mean, the move was timed with the fundamental news, but the accumulation happens before it. So this day is different than this day. This day is when the accumulation occurred at the level, use PCE to break out, create trend. And it was very obvious. If you look at all this shit, I even mechanically identified the buying over here. But anyway, this was PCE, bang. This is the test. I don't know how the hell I missed this. Anyway, so now it's initiating the markup. All right, so what are we looking at here? The downtrend that the market was in, the downtrend on the hourly, right, which was corrective pullback on the daily, it looks like a downtrend on the hourly is now broken, right? And we know it's broken. Look at this bar. It's the biggest bar in 100 bars. So pullback buying is in effect. We have the accumulation right here, heavy volume, breakout in markups. Yeah, this high is, looking for it to be taken out. And that's it. There's nothing else. All right, thank you. Have a good night. Bye.